Opinions expressed during the related show are those of the show personalities and guest alone, and not those of Vic Canellis Media Group, its parent, affiliates, or stations. VCMG Live is not responsible for any content, information, or opinions expressed. User bears full responsibility for their reliance on such content, information, or opinions.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience. Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995, Studio A.
Hi everyone, and welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we talk about something that helps you make a little money, save a little money, and help you navigate this crazy world. Let me just tell you, the real estate world is definitely something that is definitely very special. We have insurance issues, we have mortgage rates that are crazy, we have people overbidding on houses, and let me tell you, I think it's gonna happen again. Don't have a crystal ball, but the jobs report just came out, and you're like, what the hell is the jobs report? Well, we have with us today Max Fish to talk about mortgages, and we have Brendan here to talk about insurance. And let me just tell you, insurance has not been fun, but we need it, we have to buy it, unless you want to self-insure, and then you means you have no mortgage and you better pay that house off. So, welcome guys.
Thank you.
I mean, I don't lie, I tell the truth. It's the truth, right? If you want to self-insure, you can. Are there like groups of people out there that like all put their money in a pool and self-insure?
You know, I've heard about that for
Health insurance in like Jamaica.
Yeah, I've heard about that, and I think they do it here too, but I don't think that exists for,
yeah, I heard
you would know that better, but I don't think it exists for.
It exists for health insurance, for sure.
Yeah, my son in Missouri, like I know they were doing something like that at the church, I think.
Yeah. I just got an ad the other day
I'd
for
still
it.
be scared.
Now,
I'd still be scared.
For homeowners insurance, technically no, nobody's doing that.
What do you think about that? Like not having a, like.
In Florida, I think everybody should have fire, because you never know if a fire is going to happen.
Right.
You know, there's so many electrical components in a house that it can happen, and they're trying to change things with like arc fault breakers, which we've spoken about, things like that.
Yeah.
And so fire, I think you should definitely have. Water, I think you should have coverage for any water damage. In Florida, hurricanes are the big concern that can really do a lot of damage quickly. So I think hurricane damage, in my opinion, I would be a little bit more comfortable not having that if my home is really protected. You know, you have impact windows or shutters, you have a newer roof.
Yeah, but it doesn't stop it from pulling a roof off.
It doesn't, and so that's the risk that you take, and it kind of comes down to your own risk assessment.
Well, at $10,000 a year in insurance, right? And I'm seeing a lot of that.
Mm-hmm.
You know, if your roof is $37,000, you just need 4 good years. So I say wait till the next big hurricane comes and start it right after that year.
Yeah, and
I mean,
also
it sounds like the odds are good. I mean, it sounds like playing Russian roulette.
Yeah, and I would say it depends on a few things. For me, and insurance companies look at this as well. The type of roof. Okay. Do you have a shingle roof? Okay. Do you have a tile roof, or do you have a metal roof? Or a flat roof. You know, flat roofs are relatively inexpensive to repair or change. Nothing is going to happen as much during a hurricane unless something hits it. Tile roofs are a little bit more tricky. They're more expensive, but tiles can fly off during a storm. So how are those tiles attached? So for a tile roof, you might want to consider having hurricane coverage. And the same for shingles. And then if you have a metal roof, I think you're a lot safer. You know, your metal is less likely to come off during a storm. Metal roofs, typically, insurance companies are giving them like 30 to 60 years of life, which is huge.
They are for metal roofs?
Oh yeah.
Well, that's very interesting that you say that, because I had bought a rental property, and I put a metal roof on. Now I got an estimate for the tile roof, but the metal roof was only like $5,000 more. So if it's going to go from 30 to 50 years for $5,000 more, that's like a no-brainer, people. And it's funny, I was reading Nextdoor the other day, and they were saying, oh, in the city of Coral Springs, you can't have a metal roof. I saw multiple metal roofs in the city of Coral Springs, and I will say they look phenomenal.
Yeah.
So do they pull off easy in a storm? Like,
my understanding is that they would be better during a storm. I mean, if you look at a metal roof architecturally and a tile roof, there's a lot of things, little spots on a tile roof that wind stops, and so it's going to hit each tile. With a metal roof, you just have one solid slope. And so it would have to get up under that. And because there's so many little crevices and holes in tiles, there's a lot of places for wind to get under that. With metal, you don't have that as much.
so basically, I should probably replace my house with a metal roof.
If your association will allow it.
I've already heard that where I live, somebody's done it, so.
Yeah, so I don't live in an association, but I have a tile roof, and there's a metal roof coming in as soon as you come into my neighborhood. So cities are catching on, they're allowing it. And I will say with this also, it's really interesting, a lot of people are considering solar now. And with solar, some companies don't like if you put solar on a tile because it's more likely to pick up the tile, wind is at least. And so they'll allow it on certain types of roofs,
So I heard
but not
that
others.
insurance might start to exclude the houses with the solar on it. I heard that that might happen because it damages the roof.
Yeah, so the company I'm speaking about in particular, they just don't want, they'll insure solar, and depending on how the solar is connected, how much wattage, but if it's on a tile roof, it's adhered to a tile roof, they won't do it. If it's a flat roof or a shingle roof or a metal roof, they'll accept it. So I know I say this all the time, but it all comes down to the carrier and what their guidelines are.
Okay. So insurance has been affecting your business, Max, right? Because, you know, a lot of people don't understand debt to income ratio, and they don't realize that the cost of the insurance is included in their mortgage payment. And it's something that, I mean, I think some people just don't know that legitimately. Like they don't realize, they're like, oh, I'm getting a mortgage, but you have to get insurance, and that is included in the debt to income ratio.
Yeah, well, it's an interesting dynamic because when you're running an estimated monthly payment for somebody up front, when they're looking at a home, hey, I really like this home, can you give me an idea of a monthly payment? I can know with down to the cent accuracy what their principal and interest is going to be, what the taxes are going to be, at least what they're going to be until they readjust with the city.
Right.
Right? Because, and what their HOA is going to be.
Right.
Because all of this is solid data, right? Like that I can look up. The insurance portion is the only variable.
An inspection. You need to get
right?
a 4-point, a wind mitt.
So that's the only true estimate when you're talking about monthly payments. So yeah, it is affecting my business because not only is it affecting expectation, right? If you underestimate or overestimate for insurance up front, but it's also affecting debt to income ratio, right? Because we're only allowed to go up to a certain percentage of income. And if that insurance was underestimated by a lot, when it comes in higher, that might throw off our debt to income ratio. And in certain cases, that could create a loan denial and result in a loan denial because the debt to income ratio is off now. So I've been seeing it a lot with out of state lenders. And for anybody listening, I would highly recommend using local lenders. Because what I've been seeing a lot is
$250 a month.
Somebody in Michigan or somebody in Louisiana estimating insurance to where it would be there and not here. And so again, not only is that ruining expectation for people when they go into a home and they're like, hey, my payment's going to be this much, and then it jumps $300-400, right? But it also is resulting, and I'm seeing it on a weekly basis. It's resulting in potential loan denials because when the insurance actually comes in where it's supposed to be, their debt to income ratio is all thrown off. So that the insurance
and that's
piece,
what I do as a realtor, right? Is that I say to the seller, listen, you can hire any agent you want, but they get an offer and it looks pretty, right? It looks pretty on paper.
Yeah.
But in the end, I say to them, what are they using for insurance? And I call and I ask them. I don't tell them. I go, what are you using for insurance? Like $250 a month. 125 always cracks me up, right? Or like $250 a month. I'm like, okay, let's multiply that out. Now, 5 years ago, would have worked all day long, right? People don't understand Florida. Like, I don't understand California. I don't live there. I don't practice there.
Yeah.
How is a mortgage person gonna tell us from Michigan what insurance is? You know, it's just like, do you know how to winterize a home? Because I don't know how to winterize a home. I mean, I can Google it and hope that I don't, because even people that live in these places for years and years, their pipes burst because they don't winterize their home correctly.
Yeah.
Like, so it's funny, even like our bank REOs, right? And that's called for real estate owned when banks foreclose.
Yeah.
And we get these things like, I used to do a bunch of REOs for different banks that were from like New Jersey, and they'd be like, oh, you need to winterize this home. I'm like, winterize this home? Like, we don't need to do that. So, and another thing that when we have people moving up in homes, that's another thing, right? Is that portability. So although, let's just say the taxes might be higher this year, there might be a benefit that the taxes are going to be lower the following year, and we want our buyers to know that to keep them in the game.
Yeah.
So explaining all that information, I think, is pretty important.
Well, I think it's interesting because I think that a lot of times with mortgage, especially, there's this thought that more so than I'm trying to think of another business that's similar, but more so than any other business, there's this thought that it's appropriate to use somebody that lives in a completely different area. And what's interesting about that dynamic is that
some of the other lenders that I'm just like,
what's interesting about that dynamic is because typically with everything else, right, we're usually drawn to people that are integrated in the same area that we are, right? In any other space.
Right.
But there's some disconnect, I feel like.
I think it's the advertisements. Let's be real.
I mean, it's got to be
the advertisements, right? It's like, I mean, obviously we can't say the names of these places, right? But you're seeing, some crazy rates, and nobody ever tells you, like, I don't know about you, even if I didn't wear glasses, like, I'm like, what does it say down in those little things there? The disclaimer, like, there's a disclaimer at that bottom. It's there. It's that little fuzzy white stuff at the very bottom. Like, how do they get away with that? It should be legible.
It should be, absolutely. I mean, I think that
cigarette companies have to make it bigger now.
The interesting part in a real estate transaction is that the mortgage side of things is kind of like the hub, right? It's things from title have to come to the mortgage company. Things from insurance have to come to the mortgage company, right? Things from the realtor and real estate agent, addendums, contracts have to come to the mortgage company, right? The mortgage company needs all of these things in order to execute. And so my job on my end is not to wear many hats and be an expert in all of these things, but to understand the dynamic of all of these things.
Just enough to be
in our market, right? If I don't understand, if there's a missing link, if I don't understand things about insurance or things about the real estate side or things about X, Y, and Z, then I'm not preparing my client for what's best. The best example outside of the insurance that I'll use is understanding the speed in which things need to happen down here in South Florida as well, right? So obviously there needs to be an expectation for insurance, but if I'm telling you as an agent and saying, hey, I need a 40-day financing period or loan commitment period, that might be standard in other places, right, in the country.
Right.
Here, you'll be lucky if you get 20, right? So it's understanding and being integrated in a specific area and market that I think partnering with the right people matters.
Yeah.
Because there's so many moving parts.
So when it comes to the insurance part, like sometimes people they want more coverage, right? But in order to qualify, it needs to be a little less. How does that work?
Yeah, so like I said, I like to go over all the coverages with clients, make sure they're comfortable with everything. And sometimes they have to forego certain coverages in order to be able to hit their debt to income ratio so they can get the loan. Now, We can always later on go back and add certain coverages after the fact. If they start making a little more money, they want to get that personal property coverage. Okay, now we can go back in, and we do in the insurance industry what's called an endorsement, where we change the policy and go ahead and add that. So it's not a problem. It's something we do constantly.
Okay. And then I guess when it comes to insurance and, oh my gosh, I just totally lost that train, but there's just so many things that I'm thinking about with insurance. There's just so many different avenues that I think are so important for our audience to understand. I guess maybe you want to go through a little bit more specific on some insurance points for us that people should know.
Yeah, I think any time is a good rule of thumb. There's two things you want to do with your insurance policies. One, on your auto, be shopping it every 6 months. Most auto coverages are every 6 months.
Oh, I have a referral for you.
Thank you. And then on home, they're typically 12 months policies, and you should be shopping it. I've spoken about this on the show before. In Florida, it looks like we're going to have, right now, 4 new insurance companies coming into the marketplace. And so we want to see how they're going to rate. We want to see what those premiums look like. And so shopping your insurance policy is extremely important at your renewal periods. And then second, making sure that you're comparing apples to apples, because there's so many coverages, ancillary products, exclusions, all these different things inside of an insurance policy that make it what it is, but affect the premium, that you want to make sure that okay, if I'm with company A or company B, that they are the same in terms of coverage. So going over those coverages, making sure you have someone explaining to you those coverages is really important.
Right. And you work for a big company, which is Goosehead, but you're an individual captive agent, right?
A broker.
Broker, which makes a difference. So when we come back, we're going to talk a little bit more about insurance, and we're going to go to commercial and check out our amazing sponsors. Be right back.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations. Ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi everyone, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. If you're thinking about buying or selling a home, I'm definitely your girl to go to. Let me make sure you get my number. It's 954-650-0827. Again, that's 954-650-0827. And check out my website at www.lauracell.com. Anyway, welcome back, guys. We're talking about insurance and we're talking about mortgages. And we're doing this threesome today because I think that it all intertwines somehow.
Sure.
And without mortgages, there's no need for insurance. Well, other kinds of insurance, but you do other kinds of insurance, don't you, Brenda?
Yeah, we have quite a few products that we offer.
So you can help people with their car insurance. You're recommending that they shop around for it. And that's something you can definitely help them with. So what's a good number to reach you if they need insurance?
Yeah, my phone number is 954-326-9842. That's my cell. You can call me anytime. I'm not your traditional agent. That's 9 to 5. You can text me on the weekend, whatever it is. I want to make sure that you and your families are taken care of. Again, that's 954-326-9842.
Great. And welcome back, Max. If somebody's looking for a regular mortgage, 203K loan, hard money,
Equity line.
equity line,
Yeah.
equity line, we forgot equity
Yeah,
line.
yeah.
What is a good number to get a hold of you?
Yeah, so they can reach me at my personal cell phone. It is 954-729-6933. That's 954-729-6933.
And this is your dream team. We can help you get whatever you need, obviously within reason. We are all highly recommending that you start looking now, because if interest rates do hit in the 5s, I do believe that we're going to see craziness again. We're going to see people, basically it's going to be like people like running over each other and free for all. It would be like a rave, right?
Yeah.
I do see a lot of people in that $500,000 to $700,000 range are out looking right now. I think those were the people that were very frustrated in the market in 21 and early 22. And I believe that now in 24, those people are out looking.
Yep.
We're seeing a lot of moving up from the $300,000 to the $600,000 range. We are seeing prices are taking in some areas a little bit of a step back. It's definitely higher end.
Yep.
I would definitely say we've seen higher end come down about $300,000, $400,000. So if you are thinking about selling, I mean, people are selling right now. We're still a little bit low on inventory. Upgraded homes seem to definitely move faster than unupgraded homes. So how does that work with insurance too, like based on upgrades?
Yeah, so in insurance, we a lot of times want to make sure that we're insuring the property to 100% of replacement cost. And so the way we do that is we use something called a replacement cost estimator, which is a software program. It's typically proprietary to or third party to the insurance company, the carrier itself. And that program estimates the cost to replace the structure. Now, a lot of people say, well, I'm paying $900,000 for this house, but you have my coverage at $400,000. Well, we're not covering how good of a neighborhood it is or the land itself. We're just covering the structure. And so in that, it gets very granular. And we can put in things like, what type of floors do you have? Do you have linoleum roll or do you have marble tile? Do you have laminate or do you have vinyl? What kind of cabinets or countertops do you have? And so all of those things make up the replacement cost and go into that replacement cost estimator, which affects your coverage A amount and then affects the amount of your premium. Okay.
And I guess we're kind of running out of time again, which is crazy, right? Any suggestions for you right now for our fellow, clientele that would be out there looking for a home, other than they really should call you and I? They'd be silly not to.
My biggest suggestion is I wouldn't try to outsmart the market, right? Kind of.
I hear that all the time.
Yeah, kind of.
I'm going to wait till rates come down.
Yeah, I think the biggest thing that people can take away is that the market is a teeter-totter, right? You're not going to, and history tells us this, have low prices and low rates. Right. Low rates.
I haven't seen that yet.
With low rates come higher prices naturally. It's supply and demand. With higher rates, maybe come with stabilized prices, right? But even when the rates went super high to 8%, prices stabilized. It wasn't like prices were, 50% of what they were.
And they're still stabilized. You're still seeing a slight increase.
So that would be my suggestion. Just don't try to outsmart the market.
So, all right, everybody, you've heard it from all of the professionals here today. Don't outsmart the market. Definitely have some kind of coverage on your home. Otherwise, you might be finding yourself that you're all burnt out. Sorry, that was like from, what's his name?
Hopefully not.
Howard, right? Anyway, thank you for listening to Making Money with Laura Sanders. And I hope that we've saved you a little money and that you've made a little bit of money in the last few months, actually over a year that we've been on the air. And we look forward to you listening to us again next week at the same time. Thank you again and have a great night.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next